Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. Know when I roll that I flow with words. Top of the line, yeah, I'm so reserved, and I'm dropping a rhyme onto all these nerds. Different when I spit it, so prolific when I hit it. Clip the segment, rip it, share it, global in an instant. Present when I gift it, up in heaven with the mystics, and your knowledge insufficient, so you better just admit it. Danger, straight from the manger. Dirty when I'm flirting with the words I endanger. Range across the beat, so you all better tune in. Crypto on the street with the guy Viktor Bunin. Who's in, who's not? Flying on the beat like Howard Hughes in shock. Yo, and I'm lightning when I zap, blow the fuse. And pop can't diffuse this. Rock, share, and fuse it's hot. Never doubt the drive, cause until the day I die, I'll be bringing it alive. Raining better than the sky, dripping wet. Don't you ever wonder why? See me gripping, never tripping on the truth that underlies. And I'm not like other guys, we're not like other teams. Something we believe is that freedom can achieve. Everything we've dreamed, never callously claimed. Always heady when we're ready, start up Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show for you today. As I mentioned, Viktor Bunin, head of protocol specialist at Coinbase, is our guest. We'll get into it about infrastructure, Bitcoin Lightning integration, crypto's value proposition, and it's a great interview. And of course, we'll check in with our good friend Beimnet Abebe from Galaxy Trading, as always, to discuss markets. Big day, Fed day today. We'll get into it. But before we get to all of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. Man, I'm breezing, dude. I'm going quick. I'm feeling this beat, Phineas. We have an awesome episode, truly. We're going to get into some really great stuff with Viktor. He's been working in crypto infrastructure since at least 2019. And, you know, Coinbase is a big player in this. So I'm really excited to share our conversation with you. It was a good one. And but let's get into it with Beimnet and start the show. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, thanks for coming on Galaxy Brains.
Thanks for having me.
So Fed Day, but they declined to hike. So it's a flat, it's a skip.
Unchanged, yes.
But what did they say?
So a couple of things. They kept rates as is, and they increased their forecast for where interest rates are likely to be at the end of 2024.
So even higher
dot plot.
For longer?
Correct. Yes.
Even higher.
So they reiterated the message of higher for longer via their tools of forward guidance, which is, you know, encapsulated by the dot plot.
Yeah.
It went from a median dot of about 4.6 in 2024 at the end of 24 to about 5.1.
So
decent. And it surprised the market in a meaningful way.
Yeah.
And I think that was by intention. And I think what the Fed is basically trying to assess is, you know, the last leg of inflation is really tough to beat. And if market expectations get too ahead of themselves, it would actually be counter-cyclical or counterfactual to what they're trying to do. So they're perpetually in the stance of, like, we need to make sure that the market's surprised, they believe us, our credibility is high. And so you even saw during the press conference, you know, Powell kind of reiterate, you know, that kind of messaging. I will, however, caveat that, you know, Powell said unknown so many different times, you know, during, you know, the press
word
conference.
Unknown?
The word unknown. I mean, there are just so many variables with respect to energy prices. Like the world of post-COVID is very different than pre-COVID, supply chains, et cetera, how you know, the labor market is structured, you know, the fiscal stimulus. There's so many unknowns, and it's such a dynamic, like, economy that it's really tough for them to even believe in their forecasts. And that was the other thing that the Fed, you know, sort of made a point on today. They increased their expectations for growth in 23 and 24 and 25. Wow. While, you know, I think their unemployment stuff, you know, kind of stayed the same, around 4% unemployment for 24, 4.1% for, you know, 25. Yep. But their core PCE estimates, like, you know, moved lower.
Which is their inflation target.
Which was their inflation target. And so they're telling you that they're going to get to their inflation target without really harming employment that much in the forecasts, and that they're going to be higher for longer. And so that was, like, the data that, you know, was given to the market.
Which is a soft landing scenario, right?
Soft landing-ish. Absolutely. But again, you just realize that he's just stuck in such a tricky situation. Personally, I have found more confidence in some of the more dovish elements of the data that I've been seeing recently, and just, from anecdotal bits of evidence. I do think things are slowing, and that this could ultimately kind of be, the last sort of big hawkish surprise, or not big, but moderately hawkish surprise from the Fed in a while. And I think that's, kind of supported by the price action that you've seen in the market. So if you look at 2-year yields, they sold off and got to 5.15. But if you look at something like the 5-year yield or the 7-year yield or the 10-year yield, it was basically unchanged on the day, give or take a couple basis points. Don't know where we are right now, but S&P, last I checked, we were down 50 basis points on the day. And more
not too big a deal. Bitcoin was down 1%, right, or something like that.
Yeah, it's down 1%.
We're in the high 26s, though. It feels like it's mostly the same.
Mostly the same.
Yeah.
And so, with the current state of, where interest rate expectations are and the amount of money in the system and, growth that's projected and, what we know now, the Fed didn't really rock the boat.
Yeah.
Per se. And it's really tough for them to rock the boat because we know that they're data dependent.
Yeah.
And we have high frequency data points.
Right.
And so
you're primarily seeing the same data they're seeing. Primarily.
Yes.
Right.
And so it's a matter of is your reaction function that you think of the Fed's reaction function the same as the one that they have for themselves?
So the surprise was the higher dot plot at the end of next year, but that's relatively small of a surprise in the scheme of things. It wasn't a surprise hike or a surprise cut or anything like that. It wasn't dramatic or a huge shift in language.
It was a lack of an additional cut or
a skip. It's interesting. They are in that rock and a hard place, but
rock and a hard place.
This isn't the Super Bowl. We said big day, Fed day, but this is more like a wild card game or something at this point.
Yeah,
it's not like the fireworks we were seeing.
I feel like we were insulting wild card games.
I know it's not like the fireworks we were seeing earlier in the year.
Yeah, it's just quite telling. I mean, it just shows you where we are in the cycle.
Just chugging
You're
along
closer to the end rather than the beginning, and there's less surprises from the monetary policy side of things, and there are probably more surprises that are going to come from the actual hard data and economic data series.
Other thing to bring up here that could affect all markets is a looming potential government shutdown.
Yep.
I think next week's episode will be right up on when the date actually hits. I think it's basically October 1st. So we'll know more next week as to but it seems increasingly likely that the U.S. government will fail to be funded on time and will close. I think the last time it was closed for 35 days. That it did close, so it could be an impact, right? I mean, that on the country in the scheme of things.
I mean, totally possible. I think it's just it's more likely than not to happen.
It appears.
But in terms of the impact, again, it's tough. Those federal employees, they're still going to get paid. It's just a matter of when.
Yeah.
And the federal contractors, et cetera, you're not going to get paid now, but government will reopen.
What about certain services? Is there not downstream?
Certain services will definitely. I mean, the Fed was actually talking about it today in terms of they might not get certain data series for
the Department of Labor is closed or something.
Bureau of Labor Statistics or whatever. Yeah. It's and so they'll just have to make decisions without those bits of data. But again, the high frequency stuff is so good these days that it's do we really need the Bureau of Labor Statistics to calculate a number that they've been doing the same way for 40 years?
Just anecdotally, you watching it, how often does BLS data have dramatic difference though? Dramatic difference though from the other data? When you get official unemployment versus the payroll data or whatever, it's usually relatively in line, right?
It tells the same story.
Yeah,
where it's
typically.
in the same
It'd be pretty rare to see them diverge dramatically, right?
Well, where we really had the biggest diversion was I would say a year to 18 months ago when people saw rents going up 12, 15%.
And CPI.
And the CPI number was stuck at 6 or something or 7 or 8 annualized, and it's on what planet was that data
where did that data come from?
That's just not real.
Yeah.
And you can see it on the street easy data.
So there can be some divergence, but yes. So not a huge impact even on data, although maybe one. And you're saying, I don't know, just generally not a giant market event. If we have it's really just how long it's closed for, right? That matters,
I think that's kind of the biggest implication.
This would I would assume. I mean, I think the first time the U.S. was ever downgraded was by S&P during a shutdown. In 2011 or something like that. I forget the exact. I think it was after the after the great financial crisis. And Fitch just downgraded the U.S. over the summer.
For
and
political
so if
dysfunction.
and if so, this would only give further credence to that dysfunction.
Yeah, I mean, essentially, like all Congress. I mean, I don't mean this to be offensive, but essentially they just show up and they spend money we don't have. Right.
That's what they've been doing for a long time.
Really long time.
Yeah.
And it's based on the premise that the U.S. can just print money endlessly.
And our debt is over $30 trillion now, I believe.
Yeah, I mean, it's an issue. Like, it's not an issue. It might not be an issue for 5 years. It might not be an issue for 10 years.
It's almost guaranteed to be an issue.
But it will be such a big issue
at some point
down the line that it's just irresponsible what we're doing. At the same time, you could have folks counter being like, well, if you think it's that serious, then maybe it's serious enough to shut down the government and force people to the table.
This is what's happening.
And I respect that thought, but given the nature of the discourse that we have and how polarized, the two parties are in the nation, it's just tough to get to like a pragmatic solution,
right? And
to even like agree on the facts to debate.
Yeah, exactly. You're right. No, it's a precarious political situation. I agree.
Exactly, which is why the downgrade, like there's probably justified.
I mean, I think we're all witnessing how divided the country is.
Yeah.
And a house divided against itself really cannot stand. So, like, I hope just broadly something gives way in this political dynamic. I think everyone hopes something.
I personally,
doesn't mean we don't care about each groups don't have their own issues they care about and advocate for, but like the solution can't be just turn off the government, like, right?
Exactly.
To your point, I understand how they get to that, like, that play in the game, but like let's hope we can look. The first time I think it ever happened was basically like only 10 years ago. This is not something that's normal in American history, but it's become normalized now, and that's a sign of how dysfunctional it is. Well, look, we'll have more info on that next week, I think, as we get closer to the potential shutdown. So we'll talk more about it then.
We're on shutdown watch.
Beimnet Abebe from Galaxy Trading, my friend. Thanks for joining Galaxy Brains.
Pleasure.
Let's go now to our guest, Viktor Bunin from Coinbase. Thank you, Victor, for coming on Galaxy Brains.
Yeah, it's my pleasure to be here.
So what do you do at Coinbase? I know we've talked before about the role protocol specialist.
Yeah.
Is that what you do? And separately, let's explain what protocol specialist is as a concept, because I remember you were promoting the concept of this being an important role in crypto.
Yeah. Protocol specialist is like by far the most fun job in the world, and it's created to be that way. And so maybe I'll share a little bit, because I know you want to ask about Bison Trails later on as well.
Yeah.
So I'll kind of give you the backstory for it. So when I first applied to Bison Trails, it was like, peak bear market, 2019, and they had a position open called operations manager, and it just said, if you like crypto and you want crypto to be successful, come work here. And I was like, great, that's me.
Yep.
But when I came to talk to them, I had a good first conversation, and then for the second conversation, I was like, you know what? I'm kind of seeing what they need because of their work on protocols and because of my background working on protocols and incentive models and all that. And so I wrote out basically what I thought my job description should be. So when I came to talk to Joe and Aaron, the two co-founders, who are amazing, they were like, okay, we have a couple of things we want you to do. And then I was like, great. I have a list as well. Mine's written down. So you tell me what you think, and I'll tell you where we align. And so they listed 4 things. I'm like, yep, got all those 4. Here's the 5th thing. They said, yep, you should do that too. And I said, great. That's my job description. And it was only after I started it that they were like, hey, we need to put a title in the onboarding paperwork.
Yeah.
And that's how we came up with protocol specialist. And the TLDR of the role is that our job is to research and understand all the upcoming and live protocols, oracles, bridges, anything with an incentive model, and then operationalize those insights to drive product strategy, roadmap, legal, content, marketing, features, all that kinds of stuff. And so it's a role that sits within the product org, and I currently lead the protocol specialist team within Coinbase as part of the product org. We work on a lot of staking stuff. We help with bridging. We help with oracles and identity and all kinds of stuff, governance. And the reason I say it's a really fun role is that about half of the role is really clearly defined in that, okay, like, Ben, who's on my team, like, okay, you own Ethereum, right? Mm-hmm. And so that you're responsible for like understanding all the upgrades and like seeing what's coming down the pipe. And like, right now people are talking about, increasing the max effective balance of validators, or like capping how many validators can enter
The
that
churn limit and stuff.
Yeah, churn limit. Right,
Christine
right.
on our team published a great short report on that last week. So
Yeah, Christine's wonderful.
Yeah.
And so like you're responsible for knowing and doing and like working with the teams at Coinbase to like help them understand what's going on and plan for it and all that stuff. So that's half the job. The other half the job is open-ended, right? It's very entrepreneurial in that there's a ton of opportunity out there, right? So like which protocols should we be supporting, right? It's your job to go and figure that out and like make recommendations for us, right? Or for example, there's like optimizations that we can do on the infrastructure side, or there's like governance things that we can do. Or you can find other opportunities, for example, in MEV, right? And so I work super closely with the Flashbots team for a couple of years. We run MEVBoost, which is a Flashbots software, at Coinbase Cloud, and then Coinbase Retail and Custody and Prime, everybody uses it. But it was really like our responsibility to not only figure that out, but also just make sure that, we're super comfortable with the way that, things work, that we understand, kind of all the edge cases, that we communicate it well to customers. And if you consider the role, it's actually quite nice because there's nobody else that's really responsible for a lot of this stuff.
Right.
Like product managers, engineering managers, like they all have full-time jobs that they're already doing.
Right.
And so having something like a protocol specialist to supplement everybody else's work and take the charge of some of the stuff is really helpful.
It's really interesting. It's like the research and then operational glue. Because like you said, I mean, an engineer, their job is to implement. They're busy.
Yeah.
You never have too many engineers, right? They're always going to be busy. I really like this. I think we, at Galaxy with Galaxy Research, we play a similar role. I would say with less replacing the operational implementation part of it with like public publishing.
Yep.
But like it's nice that both of our companies know and recognize first of all how novel and complicated the space can be. You actually really do need people whose job it is to like follow it, figure it out.
Yeah.
Make recommendations about how to do it. So yeah, you mentioned Bison Trails. Let's talk about it because this is how I knew of you first. And this is Bison Trails is an infrastructure company that was one of the first staking as a service type firms, right?
Yeah.
But was acquired by Coinbase, which is how you ended up at Coinbase, right? Because you were at Bison Trails, and that was, you said 2019. This was maybe at the very beginning of the concept of public blockchain infrastructure. I think there was really only Bitcoin mining then, or Ethereum mining, right? There were some proof of stake networks, but it hadn't been institutionalized in a way that there was infrastructure providers. What was it like back then? And by the way, I think we said Bison Trails did do Bitcoin mining, and was early then in staking, and then that's how the whole staking of a service thing. But what was it like then? Compare it to today. Like how much more sophisticated is the infrastructure side of the public blockchain world now?
Yeah,
that's a lot, but give me the Bison Trails then and now.
Yeah, I mean, back then, there were a couple of companies that were around before us, but when Bison Trails came onto the scene, I mean, like we just totally dominated. The way that we ran infrastructure, and even now the way that we run infrastructure is the best in the entire industry, because we're entirely cloud-based, we're multi-cloud, multi-region, we use, all the kind of like top technologies that you can. And so I think that like one of the interesting things is that right now there's a ton more infrastructure providers, and there's a ton more low-cost infrastructure providers. And so I think that, there's still kind of like this ability to run things in a really like institutional enterprise-grade way, right? And that's something that we specialize in and, we do extremely well. But it's been really interesting because I kind of thought that there's going to be like this great kind of like consolidation of infrastructure companies. I thought a lot of them were going to go out of business, and there's really going to be like kind of a few key players left standing.
Yeah.
And it actually turned out to be the opposite. There's so much opportunity in this space, and staking is growing so rapidly that you have like, this kind of like wide stratum of companies that are starting up in the space that do things in different ways. And some of them have been very successful, and it's been really cool to see.
Yeah, and it is pretty big, and especially in the Ethereum ecosystem now with since the transition, right? Obviously, since the merge, you also have these semi-decentralized or even fully decentralized, right? There's a pretty broad spectrum. But I've been really Coinbase has been a pioneer here, I would say, on the more like, well, certainly on the centralized side, but not just with like the staking that you guys offer But also even with the alluvial, this thing, right? So even pushing the boundaries on like institutional staking concepts, right, and innovating there has been quite. So it's come a long way though, right? Because it was Bison Trails and the couple others, right, like Block Damon and I forget who else was there that long ago, but not many.
Yeah.
Well, it didn't really exist, right? I mean, there wasn't even really a lot of proof of stake networks.
Yeah.
Now they're almost all proof of stake. Do you see, I don't know, how do you view the infrastructure landscape further evolving? Like, I mean, what's the long-term future in your mind?
Yeah. And I guess I'll kind of talk about Alluvial a little bit, and I'll give a quick disclosure. So Alluvial was actually a team that kind of spun out of Coinbase Cloud and also a combination with Figment. So they spun out to do their own thing. And so Coinbase Ventures is a large investor. And disclosure, like I have my own kind of like side fund called Credibly Neutral, and I'm an investor in Alluvial as well. So just giving that disclosure.
Fair.
Yeah.
Appreciate that.
But yeah, I've been working with them for a long time. I helped them get started, back when it was Coinbase. And so I think that the kind of like big change that is coming up that people are starting to kind of realize is that if you look at the shift in the crypto market, like originally we started off with 100% self-custody, right? Like Satoshi mined the first block and he had the 50 Bitcoin.
Wallet,
it's in his wallet, 100% self-custody, right? And over time, we're like moving more and more in the direction of, institutional custody. And so like, me personally, like I've held, my crypto for a long time. I love using Coinbase for custody, right? I love using Coinbase Prime. And I think like more and more people are going to be moving in that direction. And so I think that JP Morgan is going to enable staking. I think Fidelity is going to enable staking. I think like all these guys are going to, be in the space. And so the question becomes, how do you actually service that market? And that's where I think Alluvial plays a big role in the liquid staking market. And Coinbase were huge fans of them.
Yeah. That makes sense. I mean, and
just to touch on there is because like, Lido is an incredible team, and they have a great product, and Steve is awesome, right? I'm a huge fan of their team. But having said that, Alluvial is really focused on, it's like, okay, if you assume that JP Morgan is going to come online, right? What are the options available to them, and how do you enable them to participate in an open standard rather than implementing proprietary solutions?
Right, and a product that like to your point, no comment necessarily on like why wouldn't they use Lido or Coinbase or whatever, but like it's a new market segment and they may have bespoke needs, right? Like, and they do. I think we all know that the needs, whether it's for infrastructure or even wallet technology, custody, whatever, are very different if you're a retail user, family office, or then a giant institution. Like it's a big ecosystem.
Yeah.
And I think that makes a lot of sense. There's room for players that service on each like level of that ecosystem. Do you think that's a good question, by the way? I think Citibank just announced that they made Citicoin, basically, which is very similar, the way I understand the announcement, this public announcement, similar to what JPM has and had been doing for years with JPM Coin, right? Do you think that how long, put it this way, not with either of them in particular, but how long before we finally get what you said about them participating in the open standard versus, I think both of those examples, as far as I understand it, Citi and JP are still like, permission private DLT type solution. How long until they connect to the open internet of value? Or not how long, what are the barriers in your mind? Like, are we heading there, right? Does crypto become financial infrastructure for TradFi?
Yeah. Maybe this is a hot take to some, but a very cold take to others.
Sure.
I don't think permission blockchains are a real thing.
Right.
Like I don't think that they are inherently useful. We've had kind of like shared databases for a long time, right? This isn't a new thing. And so when I kind of look at it, I'm just like, I think it's a good stepping stone, but I think that there is no future where permission blockchains are the thing that wins, or even the thing that gets used by like, institutions sharing things. And we have a lot of data on this. We have 10 years of data of like people trying to do this and it just not really going anywhere. And this is one area where I give a lot of credit to EY, where I actually used to work as a consultant back when as I was getting into crypto. But Paul Brody and team, they looked at the permission space. They did a lot of work there. And they were like, you know what? Public blockchains are the future. And they went all in on Ethereum. And I think that's what's going to happen with a lot of these institutions, right? Like to get your toes wet, you have to be like, hey, we're going to do this safe permission thing that we know and love and da-na-na-na-na. But then you do it and you're like, okay, that's not really meeting our objectives. We're not able to get the network effects. We're not able to get like all the folks that we'd like to use to actually use it. And so you end up having to switch to public blockchains by default over time. And so I think it's a good first step, and I think you know they're on the way.
I love that you said that. I was director of blockchain research at Fidelity, where we also tried a lot of
and there were so
enterprise blockchain use cases.
And some of these organizations had like hundreds of members.
I remember there was a time, I believe, when State Street apparently, I think, was employing like 50 Hyperledger engineers or something.
Oh, wow.
I forget. This is years ago, but this is like 2018. I love that you said that. I think to me the value of blockchain is to allow and enable parties that don't know each other, or in some cases can't know each other, or even in additional cases might know each other and be enemies, to still achieve final settlement in a disintermediated way. Yeah. And right, if we know each other, if we're business partners or you're a vendor to me or whatever, we have a legal contract, we can fall back on that. Why not just use a SQL database or something like that?
Yeah. And I also think that the permissioned aspects of what they're looking for can oftentimes be built out on public chains, right?
Good point also.
Like you can whitelist things, right? And so you can gate access pretty aggressively. The things that are hard to do is to get things like privacy in terms of your data or who you're transacting with or whatever, right? Even though it's anonymous. There's a bunch of solutions that are being built in that regard. Yeah. And so my wife, Lisa, is COO at Aztec, which is a privacy layer 2. And so I'm hoping that like a lot of these things will start kind of like pushing the boundaries of what is possible on chain, so that these institutions feel much more comfortable using public blockchains and permissioning some of the components of what they're doing, but also leveraging privacy for some other components of what they're doing.
I think that open technology standard being as in widely adopted, agreed upon format that the public blockchain offers is very powerful, right?
Yeah.
I think the hope for some of those big corps that we mentioned, maybe that are doing a more permissioned, we'll call it experiments as far as I understand it today, is that at some point they at least make a bridge. I can see a world where you have the private internal thing. It's still built on the same standard, so it's easily compatible, and then you just can bridge in and out, right? If you want to move stuff around inside your big bank, sure, you can. You don't have to use the public chain. Why do it? It's costly, right? But if I want to withdraw my stocks or treasuries or dollars or whatever it is, or coins, right? Like, then there's a bridge, basically, some kind of bridge. What do you think about that?
I don't believe in that.
Yeah.
No, just
because that would be like an internet version of the world, but you don't like a hub and spoke. You don't think that's necessary?
I just don't think it's necessary. Yeah, like I think that at the end of the day, I think that all of finance will move on chain, just straight up, right? And I think there will be off-chain computation. There will be a lot of this stuff, but when you really think about it, like, is there a good reason for why equity ownership isn't like known, like who like which addresses have what or whatever, or which accounts have what, and it's like you look at the current system of how things are built, and you realize it's all kind of an accident, like the reason you have kind of like all equities being kind of held by one company that's tracking everything.
Yeah, the DTCC. Yeah.
Right. Is just kind of a fluke. Like they just had all these papers and they're like, hey, all these paper equities are wild. We should really do something about this.
It really is true. I've told the story before. They called it the paperwork crisis, actually.
Yeah.
They were literally like dropping certificates in the mud and stuff. They were like, you know what? Let's give them all to one party.
Yeah.
It rose out of necessity. It wasn't designed proactively.
Yeah. And so I don't take for granted that like things can be a different way, And because of that, when I kind of look at, the design space, I try to learn from what was done before, but I'm also not like, this is the correct answer. You know what I mean?
Yeah, I think that makes a lot of sense. I think if we redesign the system from scratch, what would be the optimal way to design it, right? And you think the public blockchain is a clear use case here?
Yeah, absolutely.
Yeah. That's a big topic and a really interesting point of view. Thanks for sharing it. Let's move on because I have a couple other questions I want to ask about. One that I want to talk about, and we'll get right into it now, and I have other stuff too. Let's talk about the Lightning Network. You were on Twitter. You were deputized on Twitter by, I believe, Brian Armstrong at one point, saying, we are going to look into it, and Viktor is going to lead that effort. And then you documented a little bit, right? I remember there was a selfie with Elizabeth Stark of Lightning Labs there. And later, anyway, you guys have now announced, Coinbase had announced on Twitter that you will be moving forward to integrate the Lightning Network at Coinbase, which is Bitcoin's fast, cheap, layer 2 for, right? It's a state channel network. It's bidirectional payment channel, not just for our audience. I think we've talked about it a fair amount on this show. So what was that? I think based on your description of being a protocol specialist, this fits right in that role, right? Of both learning about, then helping operationalize, or theorizing and performing research on whether to operationalize, what benefits are. Anyway, you went on this journey. Tell us about this journey, and also why did you look into it, and what did you find? Let's talk about why Coinbase is integrating Bitcoin's Lightning Network.
Yeah.
It's a big giant Lightning Network pile of question for you.
A lot of stuff. And so I think one thing that people don't know is that I've actually been involved with Lightning Network for a long time. So I worked with Elizabeth Stark and Lightning Labs team and some other folks to actually organize the first Lightning Summit back in 2019 in Berlin. Mm-hmm. And so, I haven't stayed as close since then, but I've been around. And it's wild to think that was 4 years ago, soon to be 5.
Right.
And so I'll try to answer all the bits that you asked.
Well, let's just start. Let me help you out here. Why then was Coinbase interested in looking into it?
Yeah, I think a couple of reasons. I think the first thing is that we've been looking at it for a long time. And Brian's tweeted about it, and obviously there's folks internally that have been looking at it.
Right.
And so this is the Bitcoin scaling solution. And so there was never a question of will we ever support? It was never we're never going to support this.
Right.
Not that kind of stuff. But it's really, when you look at something like Lightning, you have to consider kind of the adoption. You have to consider the volume. You have to consider the usage and the requests and the technology itself and all kinds of stuff. And I think that for many years, Lightning has been quite challenging, right? To use, to run. The non-custodial experience is still severely lacking relative to the custodial experience. And so, when you look at that kind of stuff, there's a couple of factors. I think the first factor is just that, you want the technology to kind of come along to a place where you feel a lot better about it. And, kudos to, Lightning Labs team and all the other kind of clients and core devs for getting it to where it is today. Mm-hmm. I think there's definitely still a lot of room for improvement, but kudos to where they got it. I think the second bit is around continued adoption, and so having a lot of the major exchanges add support for it, having Beimnet add support for it, having folks throughout the industry start using it more and more, and start kind of sharing some of the metrics around growing continued usage, growing TVL, growing volume. Some of these things are not as easy to kind of suss out, but once you start asking questions, you get some good estimates. And the last bit is, Lightning is aligned with Coinbase, right? Or rather, Coinbase is aligned with Lightning, maybe is a better way to put it. And that Coinbase is unequivocally pro-Bitcoin. Coinbase onboarded more Bitcoiners than anybody else in the world by far. Mm-hmm. And we've been pro-Bitcoin for a long time. And so helping Bitcoin get to 1 second, 1 cent transactions is something that's really important, right? And it's aligned with what we want to do. It's aligned with economic freedom, and it's aligned with the mission of what we're trying to accomplish.
That makes a lot of sense. And so you went on this journey. I saw you talk about Lightning Labs, but you had a tweet when really only about a week ago probably, where Brian said you guys were going to integrate it, and then you had listed a whole bunch of people that you talked to.
Yeah.
And just some that I'm recalling, and I apologize if I'm leaving some people out, but for example, Alex Leishman at River, right? They have a big Lightning node, and of course Elizabeth Labs, Elizabeth Stark,
Tim
Lightning
Apple.
Labs, Tim Apple, exactly. What did you find about the state of it? Because so many there are a lot of it. I mean, Binance has it, a bunch of exchange have it. The team Cash App has Lightning, right? River, I mentioned, has a good Lightning experience. What is the potential use then? Is it similar? I mean, is it deposits and withdrawals for Coinbase users if I choose to use Lightning? Is that what you guys are thinking is a first step here?
Yeah. And I think that's kind of what we shared around the deposit withdraw flow. I think that when you think about what are the most important things to consider. There's a whole bunch of ways in which you can use Lightning, right? You can use it for remittances, you can use it for payments, you can use it for, merchant adoption, yada yada yada. There's a whole bunch of stuff.
Yeah, true.
And in the long term, like if you think that Bitcoin is going to be, a money for the world, then like all these use cases are going to be the right use cases, right?
Right.
And so when we look at, Coinbase, and why we decided to go with like retail support first, it's just, you have to think about how do you prioritize of like what's the highest value add, right? And I think being able to deposit and withdraw on the Lightning Network is something that's going to be a huge unlock. Because I think like onboarding flows generally, people sometimes forget how important it is and how much of an unlock it is. And Coinbase has, I don't know what our latest numbers, like 100 million plus users or whatever it is, right? There's a lot of folks. That's a big number, right?
And it matters too, like you said, for on-ramping and off, particularly for things that are like L2s. Like I always like, sure, I mean, I could buy Bitcoin on Coinbase, then I could send it to my node and I could open a Lightning channel with it, right? But that's a lot of steps. It's very hard. Sometimes I just want to go right from like buying with dollars to having on Lightning, and the custodial bridge there is very effective.
Yeah. And if you really think about it, right, like in the long term, right, if we're looking at like 10 years out, there's a really good chance users will never touch L1s.
I agree. Yeah.
Right.
Let's talk about that too, because I think that's a lot of people think that's true for the Ethereum ecosystem as well, which is experiencing. Coinbase was calling it on-chain summer. I've been calling it L2 season, right? It's like partly because of the advancements in roll-up technology but even Lightning, I think to your point, it's clearly reached a threshold where it's interesting and you're capable of onboarding it from a technology standpoint, right? So even in the Bitcoin, and there's a lot of talk in Bitcoin too about rollups, and there's a whole debate about drive chains, which is a whole another type of merge mined thing but like again, right, the L2, let's talk about the L2 world. I mean, do you think that L1, how many L1s do we need then for final settlement, right? I mean, if we're really just transacting and computing off chain and then in some L2 environment and then, committing on chain and having that be where final settlement occurs, what's your L1, L2 vision for that future that you started to mention?
Yeah. I mean, I think a couple of things. There's a couple of things I think will be true in the long run. I think that one thing is we have to remember, like, why are we here, right? Like, we're here to create money, right? Like fundamentally, at the end of the day, like, we are making new and different monies to the things that are in existence today, right? Like, and that's the innovation behind Bitcoin. Like, I ask people, what did Satoshi invent? Right, people say, it's hashing, or it's proof of work, or it's like Nakamoto consensus, or like all this other stuff. And the reality is, what he invented is a token, right? Just straight up, he invented the incentive model, and so he's not going to get some comp sci award. He's going to get the economics, prize and the Nobel Prize, right, for economics. If it ever comes to that, which I think it will.
It should. I think it should. It's actually incredible. I agree, though. You're saying primarily a creation of new type of money is the real innovation here. Yeah.
Yeah. And so when I look at L1s, the thing that I always think about is your token money? And if it's not money, then I don't think you're really playing the right game. Like, that is something that you have to be competing on. And there's some people that are of the belief that there will be many, many monies. And I certainly think it's possible, right? There will be many tokens, there will be many currencies, sure. But I also think it's going to be an incredible, kind of like power law there, where if your L1 is not competing to be a really strong money, and that's a very hard thing to do, and there's a lot of stuff behind that, that it's very difficult for me to see kind of like what that relevance is, right? And so I think that's the first thing. You have to be competing to be money. The second thing is, and maybe this is a question for you. So let's say crypto reaches full adoption, whatever that means to you.
Yep.
Right? What do you think will be the transactions per second, like TPS?
Of the L1s or
no,
just in the
crypto?
A lot.
Yes.
A lot. Extremely high number.
What's your
I don't know. I mean, how many transactions are happening today in all commerce? Probably, 1 million per second. Maybe, I don't know. Actually, I have no idea. 500,000 per second in the world? Maybe it's 10 million per second. I really don't know.
Okay. And so
maybe it's a billion.
Right. And so
I really have no idea. That's a giant order of magnitude discrepancy I have.
Yeah.
All right, I'll say 10 million per second.
Okay. I think it'll be 1 billion per second.
Okay, fair. So, and what am I forgetting too when I think all the online instant and all the vendor and company payments and bank? Yeah.
Yeah. I mean, I think that it'll be, a lot of IoT stuff.
Does that also mean that baked into your number is that you also think the speed of commerce is going to increase?
Oh, tremendously.
Yeah.
But it's also, if you make the assumption that, all of finance, all of identity, all of, a whole bunch of other use cases are going to be on chain.
Yeah.
Where, like, if you have a loan, right, you have a mortgage, you're going to be updating that thing all the time, right? You're going to have money be streaming all the time, right? Like there's a whole bunch of stuff that you're going to be able to do.
Right.
Once the cost of payments and transactions and updating kind of goes down really significantly. And so when I think about it that way, I also struggle with L1s that are just L1s because I'm kind of like, okay, if you want to get to 1 billion TPS, I don't care how your blockchain is designed. You're not going to hit 1 billion TPS on a monolithic blockchain. And so you have to be planning for a modular future. And we can kind of debate on like how soon will that modular future arrive. Yeah. But I also think that, even if you think it's not going to happen this year or next year, which is obviously, right? These things take a long time to actually build out. Yeah. Right. And it's very, very hard. And, Ethereum's been talking about L2s for a long time. They're just now kind of, starting to get there. But even now the technology is like not fully ready. Right. Bitcoin's Lightning has been around for a long time. Again, still not fully ready. These things are very hard to build. And so if you think that that's where the world is going to be heading, if you think it's going to be 1 billion TPS, then you have to be planning for a modular world. Yeah. And so when I take these two components of you want the token to be money and you also want to do this like modular thing that is looking at 1 billion TPS, I think it's just there will be multiple L1s like for sure, but I think those are both very difficult things to kind of go after, and so I think it's going to kind of whittle the field. Right. And so the other, I think, L1s that will exist will be essentially work token models, right? They'll be providing some particular service. And so when you look at something like Celestia, they're doing data availability, right? It's an L1, but it's like providing a thing that people consume.
Right. You can't actually transact, right? There's no computation there, right? It's just
it's not a general purpose thing, right?
Right. Do you think there'll be because when learning about modularity, what we now call modularity, which is more about disaggregating the features of a blockchain, I think. But I still just put the concept of layered scaling as modularity. It's just that this layer, an Arbitrum might have actually relies on ETH for DA, but it does computation, settlement, and transactions there, right? So really the whole concept of layered scaling is modularity, right?
Yeah, some people disagree.
The lazy ledger paper, though, I think so. And I just think the lazy ledger original paper was just like, wait a sec, we can even be more granular in how we think about layers, right? We can separate the layers inside. Not everything has to be just a clone of the L1, but that rolls up to it. I think that makes a lot of sense. Bitcoiners too have been talking about layered scaling for forever, and Lightning is a decent example, right? You have off-chain computation, but you have data availability. You have no data availability that uses on L1 for data. Anyway, we could get into that, but I think it's a powerful concept, and I agree. You don't. So maybe the Solana crowd thinks that you can scale all the way, but even they've started looking into sort of layered concepts. I agree. It's a far cry from 50 or 100,000 TPS to 1 billion.
Yeah, although I will say that, if they can do, 50,000 TPS, and I don't know what the latest numbers are, that's enough for all of crypto now.
Yeah.
Right?
That's a lot.
Yeah, it's a lot. Yeah. And I give the Solana team a lot of credit. Like they are taking a differentiated approach, and I'm huge fans of their team. And I know like Raj and Toli and Austin.
Well, I was going to say Austin used to work with you guys at Bison Trails, right? Wasn't he a Bison Trails guy?
That's right. Yeah, he was.
Yeah. No, I agree. This is what I think. To be honest, when we do this layer one future kind of discussion, it's one of the reasons why Solana is one of the only ones that I find particularly interesting. It's because it's not an EVM clone, right? It's like got a whole separate. And I find that technological differentiation to be very notable and interesting, and it is quite of a different approach.
Yeah, 100%. Yeah. That's one of the reasons why I give the Solana ecosystem so much credit. It's that not only did they have a differentiated approach, right, but they really stuck to it, and they built a following around that and a belief system around that. And I do disagree with kind of like the monolithic approach. I mean,
as you said, yeah. And I kind of do also. I mean, I think eventually they'll have to fall back into a modular approach as well. But they're pushing the boundaries though on this. Yeah.
And I think that and I've said this to Raj and Toli and the team. I think that the approach that they're taking clearly does have legs, and if their scalability is like super high and they have Fire Dancer coming, which will, another client. Hopefully that'll, push scalability even higher. And you kind of like push out the need for modularity. And that can be an advantage in its own right, because if you let Ethereum and you let Bitcoin and you let like all these other folks
Yeah.
go and like experiment and see what works and what doesn't work, and then you wait it out, and then you're like, okay, I'm just gonna take the best pieces of what you've done and bring it over, then that can be a really effective strategy as well.
Yeah.
So, you know, lots there to talk about.
Yeah, we could go on and on about this. Let's step back, sort of getting close to the end of this interview. I'm gonna step back, and you talked about protocol specialist being the best job in the world. In general, like, how do you feel about working, again, as someone who's been in crypto for a while, how do you feel right now as someone who's working? How important is this technology to the world? I mean, do you feel, give us a sense of your sense of mission when it comes to working on this stuff.
Yeah, I mean, I think, you know, so I got into crypto in 2017.
Yeah.
And then in 2018, I was already living with my then girlfriend, now wife, Lisa. And, you know, the market was doing terrible and everything was bad and down and sad.
Yeah, it was bleak.
It was very bleak.
Yeah.
And she asked me, she's like, why are you so into crypto? And I remember sitting on the couch with her and I was like, I have no idea. Let me think about it. I just never thought about it. And so I sat there and I recalled a memory that I had completely forgotten about. So this was in college. So we're immigrants. I went to Baruch, which is a city school. You know, and we got FAFSA, which is financial aid, to go there. And I also got a scholarship. And during the time, I was also working at this really terrible clothing store called Rainbow, where it's like this woman's clothing store, and the most expensive item there was like $25. And I was, you know, at the time I was like working evenings, I was working like all weekend, and for my mom's birthday, I wanted to go, and I usually gave her money as a gift, and so I remember after my shift ended at like 10 o'clock, I went to the local Chase branch. I went to the ATM, and I wanted to withdraw $3,000 to give to my mom. And the ATM was like, no, sorry, like, can't do it. I was like, well, that's weird. Like, I know the money is there. So I try again. They're like, no, call this number. So I call the number. I call Chase, and I'm like, hey, like, I'm here. It's not giving me my money. And she said, your daily withdrawal limit is $2,000. I was like, okay, well, I am here. I'm on a call with you. So just validate, you know, whatever you need to validate, and just give my money. And she was like, no, your daily withdrawal limit is $2,000. And I remember just getting irrationally angry. I was so furious. I was like, how dare they not give me my money? Like, it's my money. Like, what?
Right.
You know?
Yeah.
And I was so pissed. And so I ended up withdrawing the $2,000. I came back the next day, took another $1,000. And I completely forgot about that memory until she asked me. And now, because I think that was the moment that my trust in institutions was broken, I was like, oh, they can just refuse to give it to me, and there's nothing that I can do about it. And so I think a lot about the imbalance of power between individuals and the financial institutions, but also governments. And I look at a lot of stuff that's happening right now where I'm like, hey, I think it would be quite nice. You know, I'm a believer in financial institutions. I'm a believer in government. Like, I immigrated from Russia. I love paying taxes. Not that I love paying taxes, but like, I'm happy to pay taxes, right? I pay a lot in taxes. So something like that. But more like, I would like for the imbalance of power to be more shifted in the direction of individuals. I would like for the institutions that govern us to feel a sense of responsibility for us, rather than kind of like doing whatever they want, printing whatever they want, getting away with whatever they want. And so I think that's really important to me. And I think, like, as we're heading into this, you know, coming world of like continued advancements in technology, continued advancements in all kinds of crazy stuff in AI and blah, 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 you need for governments to be responsible to the people that they represent.
And you think crypto and public blockchains can be a force that helps push that forward?
Yeah, I think transparency is a huge important force. I think the ability for people to self-custody, the ability for people to opt out and do their own thing is incredibly important. And I think just the ability to opt out is actually one of the most powerful things, because like when there's that release valve, there is a like response to overreach. There's a response to, you know, undemocratic activity, where people can opt out, and that mechanism, which currently doesn't exist because there's no way to opt out of existing systems, is the thing that keeps power in check.
This has been a great interview, Viktor. Thank you so much for coming on Galaxy Brains. For our audience, you can follow Viktor on Twitter, Viktor Bunin, at Viktor Bunin. He's a good follow, and I really appreciate you having you here. I think the perspective has been very interesting. I know a lot of people in our industry feel similarly on a lot of these issues, but again, Viktor, thank you for coming on Galaxy Brains.
Yeah, it's such a pleasure. Thank you so much.
That's it for this week's episode of Galaxy Brains. Thanks to our guests Viktor Bunin from Coinbase and Beimnet Abebe from Galaxy Trading. Loved this episode. I hope you did too. We'll catch you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email. Read our content at galaxy.com/research and follow us on Twitter at GLXY Research. See you next week.